Welcome back to Precision Trader University. In today's video, once again, I want to help you to see how you can use the amazing tool that is Bookmap. But at the same time, I'm sure that you would all agree that if you don't know how to when and where to use an amazing tool such as this, it makes it pretty useless. So with that said, I'm going to try to do my best to help you identify the three strategies that I've found to use and take advantage of Bookmap. These are easy to identify and they're very much repeatable. So with that said, I'll also show you how to quickly screen for plays, because again, being able to find plays is, understanding the strategies is one thing. Being able to find plays to use this strategy on is another thing. And then also too, we'll go into how easy it is to find enough plays, because again, knowing the strategies, finding the plays is great, but you need to be able to find enough plays. So with that said, in the server, if you want to be able to check that out, feel free to visit Precision Trader Discord server. I have close to 700 entries and exit screenshots. And of course, why is there screenshots? Because you can't edit a screenshot, you can edit text. With that said, if you would like to look at that, there's about a year's worth, 12 months worth of trades there. So plenty of evidence that there is, lots of trades to be had using these three very powerful Bookmap strategies. Also too, just a reminder, at the end of the video, as normal, we'll do a SPY ES review. So for any of the members that want to enjoy that with us, be sure to stay on and take advantage of that, where we'll incorporate all of our indicators from the Scalping and Day Trading Indicator Course. So with that said, let's jump right into it. First things first, Bookmap. Bookmap. We know major levels of liquidity, buyers and sellers, helps us to see where the major buyers and sellers are sitting. And it's does this for us in a nice heat map. So where we see orange and red signifies a lot of people wanting to buy and sell. Again, why is that an advantage? Because we know the market loves to gravitate to large liquidity. Market makers are pushing the market, doing their best to get the market, keep it moving, and make sure we get to these large levels of liquidity. So with that said, starting the day with Apple, we see Apple dumps to start the day, and then they suck it right back up. Where did they suck it right back up? All this major liquidity here. And again, our number one strategy, our number one money-making strategy is shorting stocks as they push in to major liquidity. Now, keep in mind, major liquidity is something that you can see on something that is going to be clearly visible once you start getting to your bigger increments. So again, that's your $5 increments is what I want to be able to see on it. Now, keep in mind Apple, because again, you don't necessarily get a lot of movement. For one's trading Apple, a lot of times you're going to need to be in that something that you can see in the $1 area. If you can see it in the $1 increments, then you know you got some pretty good liquidity there. So as we see the day starts on Apple, we're on our $1 increments. The only thing that's significant is down here at 135 and here at 142. So our bias is for it to get to either 135 or 142. So again, you have to be flexible, but we know the market's gonna make its way to one of them. So with that said, we open up today, they bring it down, they push it right back up into this 140, 50-ish liquidity. And what proceeds to happen? Bam, they dump it right out of it. Okay, get back on the VWAP. What do? They push right back. This time they absorb that whole level. And from there, they dump it right back down. Now, again, a lot of people feel like whenever they absorb it, that means it has to go up. No, it doesn't. That just means we've absorbed all the orders now. Now we have to, it either has to go up or down. So it doesn't mean it's going to for sure go up. With that said, they bring it back down. The market continues to show strength. Apple, they keep buying the dip. And where do they start to push this up to? Bam, finally pushed up. We have some decent liquidity here at 141, but where's the major liquidity in relation to the current price? It's up here at 142. So ultimately, we know this is where they wanted to get it. This was our largest level of liquidity. So they wanted to suck it right in there, and whenever they did, bam, You get that instant, beautiful, almost $2 rejection right off of it. So for me, if I'm playing Apple right here today, I can assure you, your key levels to take advantage of was rejection off of this liquidity here. Again, I don't really like going back to the well 2 and 3 times. The majority of the time, I'm only going to take advantage of it one time, unless it's just just a monster level at a $50 or $100 increment, something like that. So with that said, you don't want to mess around too much in that, whenever you start getting a situation like this. So, but again, like I said, this push up here to 142, this was by far the easiest money to be made on Apple today. Because again, when it came down here to 139, there was no way to tell whether it was going to go back to this liquidity or just suck right down here to 138. So I always tell my trader, we don't like to play in between of major liquidity. And here, major liquidity here, major liquidity. I mean, if you're trying to, people right here, oh, it's underneath the VWAP, I'm gonna keep shorting it. Well, that didn't work out. Gets back up on top of the VWAP, and then bam, they suck it straight up to the 142 liquidity. Much safer to let it get to 142 and then play that sweet dump off of it. So anyway, so that's Apple. Let's check out a few more here. Oh yeah, first also too, when it comes to finding the plays, we need to be able to find the plays. So let me show you how to find them. Very easy here. Trading View. Go to Stock Screener, okay, or whatever your screener is in your platform. Just go to the day's gainers, the top gainers for the day. That's all you need. Okay, in Trading View, you'll simply put on here. You're going to get rid of all of this extra stuff. Really, all you're going to need here is price, and my favorite is change from the open. So right here, change from the open dollar amount, change from the open percent. So get that set up there, bring it back up, and from there, change from the open. This is what I want to see. The stocks that have given me the biggest move on the day, right there. That's the ones I want to see. So with that said, as far as the pricing, you want to be in the $18 to $500 range. For me, that's where I personally like to be. I want to be right in that sweet spot. Okay, I apologize. I thought I was on the dollar gains, but that was the percent gains. Another thing too is I like to focus on the dollar gains first, and then I'll zoom into the percent gains if I'm trying to find some more entries. So with that said, let's see here. What's some in the top 10 here? mRNA, Netflix, Enphase. So let's check those out real quick. So again, I always want to try to focus on that top 10, top 12, something like that when it comes to finding our plays. So go back over here to Bookmap. So we got our plays in mind. All right, let's go. I already got these went ahead and found these and pulled them up for us to save us some time. All right, so Netflix, what can we learn from Netflix? So Netflix today. All right, lots of liquidity sitting up here at 234 to 236. Okay, we start the day, major liquidity down here at 220, major liquidity up here at 234 to 236. So right in the middle of them. What's our bias? That it's going to get to one side. One side is it's not a matter of if, but which one it goes to. So again, you can play the push to it, once you feel like you have clear direction. Or like I said, my favorite strategy to take advantage of, and again, it's the highest probability, strategy that I've ever found by far. I mean, I've never seen anything that'll touch its win rate. In the server, we have I know this may be hard to believe, but you have to look at the results for yourself. 99% win rate. So go see for yourself. But anyway, so major liquidity up here, 234 to 236. So if you're wanting to take advantage of the short strategy at major liquidity, this is where you want to start looking at it. So 234 to 235. So we see that it gets to that liquidity there. Bam, they immediately dump it all the way back down to 230. Find support there. They eventually dump it. Buyers start coming in here. And then now this is one thing that you have to watch out for. A lot of people get into this habit. Oh, I'm just going to buy When I start seeing liquidity below, I'm going to start buying the dip. Well, I'm going to show you in a second why that can be extremely, extremely dangerous. Anyway, so they push it back up, sellers start pouring in the book above, because again, major liquidity above is always going to give you much higher probabilities of rejecting right at that level, just in front of that level, than buying at the liquidity below. So never forget that. So I'm gonna give you another example. Which one was it? Snow. Yeah, that's right. Snow's the one. So somebody today was asking me about snow. They said, man, it's dumping like crazy. Well, this is why I told them to play another strategy. One of our other Bookmap strategies is our push through strategy. So looking at snow, major liquidity on snow today while it was dumping through the floor. All right, so we had our first line of major liquidity started coming in around 165, and then we had some more here at 162, 160. Really, 160 here is your biggest level. Now, if you're buying the dip on snow, snow's dumping. You have no business buying the dip anywhere in here. 168, 167, 160. Why? Because you know that there is a ton of liquidity down here. Look at all this monster liquidity down at 150. I mean, you really want to be buying something, because again, remember, monster liquidity on these $5 increments, stocks gravitate to them. It's not a matter of if, but when. For example, with Apple, we've been saying for weeks now, Apple's dumping back down. It's not a matter of if, but when. Monster liquidity at 120, 130, 140, 150. So when Apple was up there at 170, between 170 and 80, I mean, I told him, I was like, man, yeah, you want a YOLO? You want a nice YOLO on Apple? Yeah, just YOLO it all, YOLO it back down in the direction of all that monster liquidity. So, and the same thing here with snow. You got to be extremely careful buying the dip in the 160s because of all this monster liquidity down here in the 150s. Now, again, intraday, playing a quick pop, nothing wrong with that. So, and that's why intraday, I recommend, if you were going to play it, you're going to play snow, this is what you need to take advantage of. Identify your major liquidity here at 160, okay, 160, and it's your major $5 increment. The key spot that I was encouraging ones to take advantage of was to not buy the dip at this spot, at this 160, but let it push through. Because the highest probability, the short scalp at major liquidity above, that one's, like I said, about as high as you can get. But if you want to even have even a little bit more, increase your probabilities even more, you play the push through strategy. That's why on the downside, we identify major liquidity, we let it push through it, usually about $1, and then we play a quick profit back to that level. And if we're confident in the hold, we'll continue to hold a portion of the position from there. So in this case, 160 is the major liquidity. What happens? It dumps through, comes down here to 159. What happens at 159? Rocket ship right back up to 160. Because again, never forget this. Major liquidity always has to be pulled back and retested on. Always. It's not a matter of if it will, it's when it's going to. So again, if you can see that liquidity on the $5 increments, okay, and it pushes through it, ideally $1, $2, just understand the money back to it is free money. Free money. You just have to see it for yourself. But anyway, like I said, that's the push through strategy. So that one right there, easy money on snow. Again, I couldn't recommend anybody to buy and hold this thing by any means, even for swing trading purposes, because again, all that monster liquidity down there at 150. So we don't want to mess with that. Okay, that's just screaming that this is going to go even 155. So don't be surprised to see snow suck right down to 150, 155. Anybody, buying the dip right now, that's risky business for sure. So anyway, so that is that's snow. What else did we look at? Netflix, did we check Netflix out yet? Let's see what we could have taken advantage of on Netflix. All right, nope. We looked at Netflix pushing up to 234. All right, what else? I'll give you one more. Let's go with mRNA. See what we could have got out on that. That one was in our top 10 as well. All right, mRNA. All right, look at this pump. Man, beautiful here. So starts the day 118, around 118, and they just blast this thing off. I mean, again, it's so hard to predict at the open where something like this is going to go. But you do, with Bookmap, you do have some very high probabilities of understanding where's all the monster liquidity at. In mRNA's case, 127, 126, 125. I mean, this is where it's all at. So what does that tell me at the open? Where is my bias? It's to the the gravitational pull that's being exerted by all of this monster liquidity up here. So what does Moderna do? Sucks right up to it. And where do you start getting some major liquidity coming in the book? 125. So you know that if you're playing the momentum to push, you know this is where you take your profit, just in front of this area. Okay, you never hold profit into major levels of liquidity. I repeat, you never hold profits pushing into major levels of liquidity ahead of you or above you. That's a no-go. So again, if you can see it on the $5 increments, it's major liquidity. Never hold it. So get that through your head. You'll save yourself a lot of money. So what proceeds to happen? It gets to 125. So if, let's just say hypothetically we were in it, well, that's where you're taking profit. And on top of that, well, you made that profit to it. Hey, why not play the money, play the dump down off it? Because we know, in this case, $1, $2, $3, $4, $5. I mean, yeah, very high probability. So we end up dumping all the way down to around 123. So a quick $2 dump. They push it right back up to it. They dump it off of it again, all the way back into the 122s. Again, they pump it up to again. The sellers come right back in. They dump it down to 122 again. So again, this is another thing too to keep in mind. Whenever you keep having this dump and there's no major liquidity coming in below, you know that they're going to want to suck it straight back up to it. Straight back up. That's why it kept popping back up every time, because there was no major liquidity coming in below. So what is the market going to do? It wants to keep moving. It's a top 10 movers. I mean, so again, what is your bias? That they're going to suck it right back up to it. What do? Once again, 125, and they dump it off once again. So again, can you imagine the people that were holding all this profit and just let it dump all these times? Again, that's why you do not do that. Now, you want to play it safely and you want to re-enter, it's pretty simple. You let it push through. This is our momentum strategy. It didn't happen here, but this is what it would have looked like. It would have pushed through, came back, got support on 125, support, wick off, bam. There's your sign that she's heading up. And where's she going to be heading to? 126, 127. So if you want to enter there and play to this major liquidity above, that's fine. But you do not hold your profit into major liquidity. So with that said, we've covered our three strategies: our shorting at major liquidity or above, our push through strategy, and you can play that too, whether that be on the top side or the downside. The downside today would have been with snow at 160, let it push through 160, down to 159, free money back to 160. And in this case, we covered hit on the momentum. If we would have absorbed here, push through, come back, got support, and play to the the liquidity above. So that's the three strategies to take advantage of. I also showed you how to find the plays as far as screening for them. Again, it's very simple. Just your top gainers. That's it. You just want to be in stuff that's moving, because again, it's going to be pushing to these major levels, $5 increment levels of liquidity. So with that said, that covers the Bookmap session. If you want to jump in here for the members, we're going to go over the SPY ES for the day and see what we could have learned from today's price action. So here was our SPY ES. And again, why do we focus on SPY and ES so much? And again, these are interchangeable, SPY, ES with either one. Like I said, they're exact same candles, all the same stuff. But why do we focus on SPY so much? Because it turns the market. We've seen it countless times. I had people come say, well, the QQQs, no. The Qs can keep running, keep a move going longer than SPY. But when you're talking about turning the market, yeah, yeah, it's by an ES. It's, yeah, I've seen it countless times. So it's not even a debate for me. So with that said, our first potential play for every day is our opening range break. And again, we're going to do that on the 2-minute time frame. All right, and it has to be at least a 40 to 50 cent candle. What was our first candle today? 20. Okay, so we were right there at a 45-cent candle. So check the box there. Now, once we get that, at least, again, if the first candle isn't at least 40 to 50 cents, then we're going to make sure we use 2 candles worth. Okay, but then we finally get that, and what do we want to see? We want to see a break outside of that range. And what do we get? More times than not, when we get a break outside the range, at least 50 cents to $1. So in this case, say you got in here 363.60s, and again, you're looking for 50 cents to $1. So $1 would get us down to 362.60, somewhere in there. All right, so we got our dump all the way down here. Where does it dump to? 362.50s. And what do they proceed to do? Bam, blast it straight back up to that range. And then from there, nice dump action. So that covers the opening range break for the day. Beautiful strategy. If you're going to play anything in the first 20 minutes, that's the one to play. Outside of that, I can't recommend playing anything inside the first 20 minutes. Okay, that's more times than that, that's going to be by far your highest probability of success within that first 20 minutes of the day. Again, don't get a habit of touching anything else in that first 20 minutes unless you like to lose money. So from there, what else do we get? Now, on our chart, we always have our algos. Again, these are these lines right here, these big lines. These are automatically on our chart every day. These are computer trading levels. Institutions, computers buy and sell off of these levels. These are again, all computers have to have calculations in which to buy off of. Again, these programmers have to give these trading computers something to buy and sell off of. Thankfully, we've been able to find, a lot of these key levels. Again, do we have all of them? I'm not going to say that, but we got some really good ones. So with that said, we have a big gap here, gap between major algos. So whenever we have that, we know the market's going to want to move. We love any day, whenever we come to the market, we see a lot of algos, nice wide algos. We know the market's going to be free flowing, because again, whenever they go in between these algos, they're going to be wanting to run from one to the other. So that said, what do we see? They end up sucking straight down to this algo here, 360.97. Pull straight into it. Bam, blast back up. We had a double algo here, which is where they came and got support earlier. Blast up to the double algo here. Also had some major moving averages. Our big 6 here, 2 of them. The major 15, the major 5-minute. And what do? They proceed to dump it straight back down. And yeah, from there, we finally get a nice consolidation here. One thing that, am I on the 1-minute or the 2-minute? Oh, I apologize, guys. I was wondering why we had so many extra candles. I was like, man, that's a lot of candles. Okay, I apologize. We were on the 1-minute there. So, but at the same time, the opening range break still a-okay here. So opening range break. There you go. There was our range. Dump through. So yep, still worked on the opening range break. Sorry about that. I thought I was on the 2 minutes. Again, our go-to candles are always the 2-minute candles, FYI. So with that said, throw all the indicators back on the course, or all the indicators back on the charts rather. All right, so what do we get here? Well, first thing we called out this morning was that we got a computer candle right here. This candle right here. Now, what do we know about a computer candle? A computer candle is any candle that is $1.40, $1.50 plus on the 2-minute time frame. If we get a candle that's bigger than $1.40, $1.50, that is our textbook, or bigger, is our textbook ignition candle. And we know that when we get those, we're going to give back 50 to 100% of that candle. So, beautiful thing to take advantage of. With that said, we get this candle, this ignition candle, around $1.40, and what do? They pull it back 50%, and then bam, they dump it through. And again, what do we always know? Whenever they get around to the bottom of these candles, you had to be very, very careful because this is the pump or dump. As you can see here, bam, they dump because again, yeah, you lose a ton of support when you lose the base of this candle. So with that said, they dump it. They come down here. They set us a midpoint consolidation. And again, our vertical breakout strategy, by far the best price action strategy in the whole entire market. There's nothing that touches it because again, it is the highest probability setup on SPY and ES, and we know that SPY ES leads the market. So there is, yeah, it is worth its weight in, digital gold. So with that said, we get our consolidation here. Once we get this consolidation after a very steep pump or dump, we know that what's going to happen. We're going to get an ignition candle out of our bottom or ignition candle out of the top, and that's going to signal the direction. And ultimately, they're going to get it back to this box. So with that said, we get a nice ignition candle out of the bottom. That gives us our direction to the downside. And of course, where were we buying the dip today? We were buying the dip right here, 159. Oh, with that said, we had 4 entries on the day. Entry number 1 was the short in the pre-market, 364, 365. You want to confirm these entries? Feel free. Screenshots are in the server. So 364, 365, got that short. That worked out beautifully. Next entry was for 360. 360, we got our dump down here to 360. Quick 70, 80 cent pop there. Another entry was 359 right here. So this was our other entry. So got our pop back up to 361. Another entry there. And then also too, we had another entry at 358. So 358 down here. So this was our other entry. Got our pop there. So again, 364, 365 short. Got that one. 360 buy the dip, pop there. 359 dip, got that pop there. And 358. So got all of those. So very nice. Now, as far as our vertical breakout. So what did we get in regards to our vertical breakout? So we got our midpoint set here. And what do? We know that as soon as they start reversing it, they're going to suck it straight back to the midpoint. And that's exactly what they did. Got another vertical breakout set out later in the day. Bam, vertical straight up. Midpoint consolidation. What do we know? They're either going to bring it back to the base here, or they're going to finish it out. Well, what did they do? They brought it all the way back to the base. So that one done. They end up setting up another vertical breakout from here to here. Midpoint consolidation. They start breaking out of the bottom. Whenever we see that, we're looking for them to finish it. Well, they get it down here. And whenever they start reversing it, where are they going to go back to? They're going to go back to this area, the midpoint box. So that one was very nice as well. Then we get up here later on. They start going vertical again. This one right here was, pretty laughable. 1, 2, 3, 3 ignition candles in a row. Okay, if you don't know what ignition candles are, get the course. You'll know exactly what they are, how to identify them, how to put an indicator on top of them that identifies them. So we get ignition. We get a vertical breakout here, straight up, very, very much straight up. If you can't identify this vertical breakout, I mean, you gotta. This is about as vertical as you can get. What do? They come up here. They set the midpoint. We shorted this area in voice chat, 362. And then what do we get? Midpoint consolidation, and we know. What are we looking for at this point? An ignition candle on the top, ignition candle on the bottom, wherever they give it to us. That's where our bias is. They give it to us on the bottom. What does that mean? Bam, they're heading to the downside. And where are they heading? Back to around the base of where they started this vertical breakout. And where do they bring it to? Bam, back to the base. Whenever they get to the base of a vertical breakout, more times than not, what are they going to do? They're going to pop it. They're going to pop it. So remember what happened over here? They got it up here. They brought it back to the base. What did they do? They end up popping it 70, 80 cents. Okay, over here they end up popping it even more than that. $1.50 there. $1.50 back into the major 15-minute moving average and an algo. They dump it straight back off. They go back up here, set another midpoint, vertical breakout, midpoint. And again, keep in mind on a vertical breakout, your candles, these are going to be, for the most part, all one color. Okay, all one color. You may have a little bit of the other color, but it's primarily, in this case, look, all green. In this case, all black, one little bit of green. Okay, in this case, all green. In this case, all green. So keep that keep that in mind whenever you're trying to identify your vertical breakouts. And again, if you want to get all the nuances of the vertical breakout, get to the server, get the Precision Indicator Course 2.0. Like I said, it is worth. Again, I'm not trying to sell you anything. Just try to take advantage of it. I'm telling you, this is you will. Yeah, you'll kick yourself in the behind for not knowing about this a long time ago. So, with that said, that was really all of our key spots on the SPY ES today. Anyway, hope this education helped you out. And yeah, feel free, like I said, come get in voice chat with us on a daily basis. Like I said, we're calling this stuff out, before it happens. Again, whenever we're entering these areas, we're entering it before it gets there. Again, this is not that we're not chasing the market. We're not, again, we are able to predict what's going to happen before it happens. Anybody that says you can't do that, well, they just don't know what we know. So anyway, hope that helps you, and thank you for your time, and enjoy the rest of your evening.